Okay, we're up to our last transaction, which is dealing with the purchase of inventory and then the payment of creditors and that sort of stuff. So the last transaction that we are dealing with is that of purchase returns. It's the easiest one that we need to deal with, so it's straightforward. It'll literally take us 1 minute to go through it. So hopefully, the rest of them have made sense to you, and this one is super simple. So ultimately, with a purchase return, we've got a couple of transactions, one where we purchased the inventory and then we've returned some of that inventory. So on January 8, we purchased $600 worth of inventory, $60 GST, and we owe $660 to our creditor. And then on the 12th, we've returned some of that faulty inventory. So the simple solution is that you simply reverse absolutely everything. Everything goes to the opposite sides using the amounts that you are provided with, so the amounts that have been returned. So on January 12, opposite side of inventory, $200. January 12, opposite side of GST credits, $20. And then same date, opposite side of the creditor for the total of $220, with the same cross references that you use because they're applying to the same accounts that you used before. So creditor A1, creditor A1, and here inventory / GST credits. And so as a result of that transaction and the return, we've got a total of $400 inventory left, which makes sense because we bought $600 but then returned $200. We've got GST credits of $40, which makes sense because we had the $60 but then we returned $20 of that. And we owe our creditor $440, which again makes sense because we here owed them $660 and then we reduced that by $220. So hopefully that's a nice easy one to finish off.